Using confirmation to plan your trades is going to help you make more informed decisions, improve your accuracy for your entries and exits, and of course, improve your overall risk management. So in this lesson, I'm going to introduce to you some of the price action patterns I use to help me determine when a trade is likely to work, when I should enter into a trade, what prices I should enter, and where I should place my stop loss. So if you're ready, let's dive right in. Now, the thing I want to be very clear about first is that when I say confirmation, it does not mean guarantee. Just because a stock checks all the boxes doesn't mean it's definitely going to work. Confirmation is just where we look for additional signals that help validate our trade idea. And when our trade idea is validated, it will not only help increase the odds of taking a winning trade, but it can also help with managing risk effectively. But there is always the chance that the trade could still not work out, which is why the other aspects of risk management, such as position sizing and stop losses, are very important. So let's explore why waiting for confirmation is important. The first reason is that it helps filter out false signals. So by waiting for confirmation first, is going to help reduce the chance of entering on a false breakout and taking a loss. The second reason is that it helps improve your risk management. By waiting for confirmation, you'll be able to have a more defined entry point and a basis for setting your stop loss and take profit levels. So this is all going to be very crucial in controlling risk as it helps develop a structured plan. The third reason is that it increases confidence and discipline. When you wait for confirmation, you are more likely to stick to your trading plan and avoid impulsive or emotional reactions to short-term price movements. Now, while confirmation is important, timing is just as equally important as well. If you enter into a trade too early, you run the risk of getting a lower win rate. If you enter into a trade too late, you run the risk of getting a lower reward. But by entering at the right time is going to increase your win rate and reward. So how do we enter at the right time? Well, this is where I use price action patterns. Price action patterns provide visual clues about potential price movements. So if we look for these patterns around support and resistance levels, then it's not only going to help identify confirmation that these levels are holding, but also with timing our entries as well. Now, to keep this lesson short, all the examples I'm going to show you are aimed towards trading to the long side, since that's what most of this course is about. But if you wanted to trade price action patterns to the short side, just look for these patterns to fail or not play out as expected around major resistance levels. Now, the first pattern you'll see is the consolidation underneath resistance. This usually forms because traders are testing resistance multiple times, and if it does finally break, it could start the early stages of an uptrend and make a substantial move. So whenever I see a stock consolidating under resistance for some time, I like to let it break through the resistance and then wait at least 5 minutes for it to retest the recent resistance as support to be sure that it's not going to be a false breakout. So as it's retesting this level, I'll place a stop limit buy order above the most recent swing high that was made above the last point of resistance. And if the price breaks above the high, I'll be in the position to ride the push upwards. A good stop placement for this particular pattern would be below the most recent swing low that has formed below the new support line. The second pattern you'll often come across is the late stage uptrend pattern. If you see a stock approaching resistance that's already been uptrending without a major consolidation for the day, then it's highly likely there's going to be some selling pressure starting soon. Even if the price breaks above resistance, the price may not continue much higher because the recent buying activity that has created the long-lasting uptrend is already extended. Eventually, traders are going to want to take profit, and since the stock is at a major resistance level, profit takers may see this as a good time to do so, not to mention all the selling coming from short traders who want to enter at resistance as well. So you have to be careful about entering into a long position in this situation, as the price is likely to drop soon. So what I like to do is be patient and wait for a substantial drop to happen, and then the price to consolidate to relieve some of that selling pressure. And once the selling pressure has been relieved and the price rises back up again, I want to see it have enough strength to rise back above resistance. So if this happens, notice what type of price action pattern forms. It's the consolidation below resistance again, the same pattern we just previously discussed. So I treat it the same way. I wait for the price to break above the resistance and then wait about 5 minutes for it to retest the resistance as support. As it's forming the retest, I'll take note of the most recent swing high that has occurred above the last point of resistance and then place my stop limit buy order above it. And if the price proceeds to rise above that swing high, I'll be in the position. Same deal as before when placing the stop. I'll choose the most recent swing low below the entry that has occurred below the new support line. The third price action pattern you'll see often is the strong breakout consolidation pattern. If you see a stock break out above resistance and then price makes a substantial move upwards without any sort of pullback, then the stock definitely has some strength to it. But eventually, that strength will start to die down and go into a consolidation period. Now, since the prices never really came down to retest recent resistance as support, it is likely that the price will drop back down and start the consolidation. So for this situation, I like to wait for the price to drop back down to the recent resistance and then start to consolidate by making at least one swing high and then one swing low. Once it makes that swing low, I'll place my stop limit buy order above the most recent swing high that occurs above the recent resistance line. Now, this whole process usually takes about 15 to 30 minutes, so you have to be patient. But once it breaks above the most recent swing high that has formed above the last point of resistance, that's when I'll enter into the position and then place my stop loss below the most recent swing low that has occurred before the entry, but also below the new support line. The final price action pattern that you'll most likely see is the breakdown fake out pattern. This pattern is where the price looks like it's holding support, but eventually breaks down below it, taking out the previous swing lows that were made. Now, the reason I love this pattern so much is that when traders see this, it's usually a sign of weakness. So what happens, short traders start entering into positions thinking it's a good opportunity, which they may be right, oftentimes they are, but if the price doesn't make a substantial move downwards like they were hoping for, and the price ends up climbing back above support again, then they will most likely start exiting their positions. And when a short trader exits, they are placing buy orders. So this can create a lot of momentum to push prices substantially higher. So whenever I see a breakdown of support, I take note of the most recent swing high that has occurred above the support level and then place a stop limit buy order above it. Because if the price can rise back up and reclaim support by taking out the swing high that has occurred above support, then it will most likely produce a substantial move higher. Then once I'm in the position, I'll place my stop loss order below the most recent swing low that has occurred below the support line. All right, so that is the 4 main price action patterns you will see and how to play them. I hope you all learned something, and I'd like to thank you so much for watching.